What's up, guys, and welcome back to the channel again. Godlove here again, and today should be one of your best days. Today you should be very happy you are watching this video, because what I want to present on this video today was a trap. All right, this is a trap that is waiting for you in forex trading. So even if you haven't fallen into this particular trap, this is a trap that is waiting for you, and at one point or another, if you are not informed about this particular topic which I'm telling you today, you will fall in this particular trap whether you like it or not. So make sure you stay to the end of the video so that you can be able to understand this particular concept, how convincing it is, or how tempted it is for many people to think maybe this is a way to go in forex trading, and how you can be able to avoid it. So what is this particular trap I'm talking about? I'm talking about the Martingale system, all right? The Martingale system. They call it the Martingale system of trading. Or you can even see here, I even put the deadly, all right? The deadly Martingale system of trading. I heard of this concept, or I was a victim. I was a victim of this particular concept back in 2015 when I just started trading forex. When I started trading forex, obviously you guys already know my story. I started with binary options, and in binary options, this particular system is very common in binary options. All right, the Martingale system. Don't worry, we'll go in detail for you guys to be able to understand what is the Martingale system, so that you can better stay away from something like this. Because whether you like it or not, if you are not informed about this particular topic, you are going to be totally deformed. You will fall into this trap one day or the other. So before we get into this particular system, for me to elaborate what it means and how you can be able to be on the alert, the only thing I want you to do is to smash the like button on the video. Let's get this video to at least 2,000 likes so that I'll know you guys like topics like this. Remember, I always say in forex trading, if you are not informed, you'll be totally deformed. So make sure you smash the like button on the video, and if this is your first time watching my content, or if you have been watching my content and you haven't subscribed, make sure you also smash the subscribe button below. Perfect. So let's get into the video to see what is the Martingale system and what it stands for, right? So the Martingale system was discovered purposely by gamblers. Alright, just from the name, it was discovered purposely by a gambler. But this guy, I think they said the name was Martinda something Harry. That was right in the 1930s. Alright, it is believed, because nobody actually know who discovered this, but from research, it is believed. Essentially, the Martingale strategy dictates that players double down on their bet after every loss. Can you guys already hear how suicidal this sounds? All right. So the system dictates that players double down on their loss, and on their trades after every loss. All right. So essentially, the Martingale strategy dictates that players double down on their bet after every loss. People believe it was discovered by John Henry Martingale, a British casino. So this thing was even discovered by a British casino owner. It was in the 1930s or early in the 1925 or 1935 or so, very early. The person who discovered this was a casino owner, because you know, in the casino, that is where the real gambling. Sometimes they say don't trade like a casino owner, right? That is where the real gambling is involved. So this guy was a casino owner, and he discovered this strategy. And how does the strategy work, or what is in this particular Martingale strategy? According to the strategy, anytime you place a bet, let's just say, okay, you place a bet of $100. If that bet doesn't go your way, you double on that bet. So the next time you want to bet, instead of betting again $100, you bet now $200. If you still lost that particular bet, the next time you want to bet, so in a series, you are not supposed to give up. You keep betting until the winner comes in. So you place $100. If it doesn't go your way, you need to now bet $200. If it doesn't go your way, you bet again $400. If it doesn't go your way, you bet again $800, with the hopes that the one winner that you have will be able to bulldoze, will be able to cover all those small losers. Doesn't make sense. So in the olden days, in gambling, it is very effective. It works very well in gambling, because just from what I explained, let's just say you've already bet I used to call the recovery factor of 3. Maybe you bet $100, it was a loss. You bet $200, it was a loss. You bet $400, it was a loss. By that time, you're already down with $400, $200, and $100. You're already down with $700, all right? So that number $400 that you are betting, let's just assume at that point in time now you have a winner. So if you have a winner, remember, obviously you are winning 2 times what you bet. So at that time, if you have a winner, you have $800. And if you subtract what you've been losing, you obviously still have a profit. All right, you will still have a profit at that point in time. So you see how this particular deadly system used to work very well. Or it works very well in gambling. It works very well in betting. But when it comes to Forex trading, people make the mistake to try to use this particular system in trading. I made a mistake. When I came across this particular system, I was very, very flabbergasted. I was so tempted to use this particular system, and I tried, and I blew a couple of accounts. I blew a couple of accounts that were my life savings because of the Martingale system. And that is why I'm going to be able to show you guys how it works in Forex trading, and why you think maybe if you try it's going to work, and the trap which is involved, all right? So that is how the Martingale system was discovered. You can see this is a guy that is believed to have come out with this particular concept that took away almost about 3 of my accounts. So if I see this guy, maybe I'm going to lock this guy up or have a personal fight with him. Perfect. Let's go to the next slide. Now, let's talk on how it's supposed to be how they. Let's put this. So how the system works. Remember, I've already explained to you guys how the Martingale system works. And here, the other thing I'll just elaborate here. You can see this guy is standing here. What can you see here? Something like a trap, right? So you're seeing something here like a trap. Meaning, this system sounds so appealing, because remember, see, you bet $10, you lost, you bet $20, you lost, $40, you lost, $80, you lost, then maybe $160, now you win another $160, you cover your losses, you have a little bit of profit, you think maybe this system is, you think, oh, maybe I've already arrived, maybe I've seen that Holy Grace system, but there is a trap involved, there is a trap. That's why you see this particular trap here, the Martingale, you see this trap, and I'll show you where the trap is, all right? So in a nutshell, that is just how the Martingale system works. Now let's go to what? The Martingale system in Forex. This is where we are more concerned. All right, this is where we are more concerned. Let me show you how it works in Forex. Why you believe maybe the first few attempts, you might believe, oh, maybe this system works. I'm going to be using the Martingale system in Forex trading. Then I'll show you where the trap is. I'll show you the trap that is waiting to consume your account. Good. You can see here, this is a Forex chart. Let's just assume this is a Forex chart, and this is an uptrend, right? The market is bouncing on what? The market is bouncing on higher lows, higher highs, higher lows, higher highs. So this is clearly an uptrend. And by this time, let's just assume we're somewhere here. The market was somewhere here, and we don't know this. We don't know what is going to happen the whole of this section of the chart, right? Let's just assume the current market price was just somewhere here. So we did our analysis, we did everything, and we said the market was going to go down. Understand what I'm saying? And we said the market was going to go down. So at this point in time, we did what? We sold with 0.01. So we started with the least. You always, with this system, you always start with the least lot size. Because remember, you're going to be doubling the lot size. After every loss, you're going to be doubling the lot size. After every loss, you're going to be doubling the lot size. So here, we started with what? We started with 0.01. And instead of the market, remember we saw somewhere here, and instead of the market going down, it instead went against us, all right? It instead went against us. And let's just say, and here in this particular system, you go with the risk to reward of 1:1. 1:1. So any trade that you go, any particular step where you have a winner, your losses will be covered. Let me explain what I mean. So if I say here, let me reduce the thickness of the pen, or it's fine. So if I say here with 0.01, let's just say my take profit is somewhere here at what? 10 pips, all right? So my take profit is somewhere here at 10 pips, and my stop loss is somewhere here. Where you're seeing this line is somewhere here. Stop loss at 10 pips, right? At 10 pips. So my take profit is here, my stop loss is here. And remember, I saw somewhere here, right? I saw somewhere here. And where I have my stop loss is not actually going to be a stop loss. You see, where I'm supposed to put my stop loss at 10 pips, take profit, 10 pips, stop loss. Where I'm supposed to put my stop loss is not instead a stop loss. That is my recovery point. They call it, in this particular system, they call it the recovery point. So at this particular level, you instead put what? A sell stop. You see, so at this particular level, you put a sell stop of double this particular lot size, because you are assuming that, okay, if I sell at this point in time and this market doesn't go my way and it instead go against me, at this level, I want to get into the market again with double the lot size. So here, you put a sell stop of what? At this level, just below this, if you are targeting 10 pips against you, you put a sell stop of what? 0.02. Good. At that level again, you just calculate again another 10 pips. Another 10 pips, you put another sell stop again of double this lot size, 0.04. Good. After that again, immediately after that, you calculate, you double this again, you put another sell stop again of 10 pips or what? 0.08. Can you see? So you just put those levels, you just automatically put those sell stops with the hope that if the market, you just keep putting and going until maybe your account balance can handle, maybe your margin is out. That is the strategy. All right, that is why you need to have an infinity amount of account, or you need to have a lot of capital before you try something like this, because you don't know at which level you're going to hit your take profit. Perfect. So since you already have those levels in place, what happens? The first level, the market didn't go against you. The market went against you and instead trigger your sell stop. So at this point in time, you're already what? At this point in time, this trade is already in a loss. So you're already down with, let's just assume we are using a $1,000 account, right? And we are using 0.01. With a $1,000 account and we are using 0.01, meaning 1 pip, let's just assume 1 pip is going to be $1, right? So minus 10 pips, we're already down with minus $10, right? So we are already down with minus $10. And now, the lot size of 0.02 now is triggered. Since this lot size at this particular level is triggered, now instead of having a trade of 0.01 in place, we have now another trade. Remember, all these trades are still supposed to be open until the final take profit is hit. At this level, this one now is open. And let's just assume at this point in time, instead of the market coming to hit your take profit, because this one, the take profit is supposed to be here. The take profit is supposed to be here at what? The take profit is here at 10 pips. This one, you say here, take profit is supposed to be here at 10 pips. This one, take profit is supposed to be here. All right, so these are the take profits. Good. So you instead, when you saw this one at this point in time, instead of the market coming in your favor, it started going against you again. So at this level, how much are you already down? You're already down with, remember this one was open right from here, and if this one is still open, you've already passed this level and this level. So you are down with minus 20 pips. And since you are using 0.01, you are now with minus $10 again. So this one now you have minus 20 pips, minus $20. So from here to here, the first trade, you have minus $20, and this particular trade of 0.02, it has gone against you by 10 pips, and remember, 1 pip here is $1, right? So $1, 1 pip here is $2. $2 times 10. That one again, you are down with minus $20. Perfect. So at this point in time, I want to see, because remember, at this point in time, we were able to hit our take profit. So I want to be able to show you how the system works. So here, we are already down with minus $20, minus $20, minus $40. Okay, the market, instead of going on our favor to hit our take profit here, went against us again. You see, went against us again. With this strategy, you never give up. You keep, so it's like a trap. You keep doubling until you hit your take, until one of the trades hit your take profit. So at this point in time again, we say, okay, once the market has already gone on our against us again by 10 pips, we double again instead of 0.04. Oh no, we're somewhere here. So this one, instead of hitting our take profit, it went against us, right? So at this particular level, let's calculate to see what would have lost. So if we sell somewhere here, and now remember, the lot size now is doubled again. Instead of 0.02, here we have what? 0.04. And unfortunately, instead of the market going in our favor to hit our take profit, it went against us again. So let's calculate what we are already losing at this point in time to see. So if the market went against us to this particular level, what are we losing? Remember, let's start from the first trade. The first trade is already against us by what? 10 pips, by 10 pips, 20 pips, and 30 pips. And 30 pips times what we are risking, right? So you just keep doubling on your bet or doubling on your trade until one of the trade hits your take profit. And remember, our take profit is where? A take profit of the present trade, the take profit of the present trade is at the entry point of the previous trade. All right. So let's just go straight to the last trade where we hit our take profit to see if we would have made any profit or not. All right. So this is the last trade. So we just keep adding until here at the last trade where we're able to hit our take profit. Remember, our take profit is at the entry point of the last doubling factor, which is 0.04. So at this point in time, what was the lot size we're using? I want us to calculate to see if we would have made any profit, right? What was the lot size we're using? We're using 0.08. And on the $1,000 account, let's just assume a pip 0.01 is $1. So 0.08 now, let's just assume is $8, right? So $8 per pip. So $8 times what? $10. All right. So $8 times $10, because remember we are risking $10 on each trade. So $8 times $10. What are we gonna? We're gonna be having something like plus $80. So we're going to be having plus 80, all right? So at the take profit at this level, we have plus $80. But remember, all these trades were still open. All these other trades were still open. So let's calculate to see what would have lost, right? So all these other ones were still open, and this first one, let's start from the first one. Remember, we got out here, and at this level, we already lost 10 pips and 10 pips. So we already lost what? 20 pips. So 20 pips times 0.1. Remember, we were using 0.01, so we're risking just $1 times 20 pips is equal to what? Minus $20. You see, so that is minus $20 for the 0.01 trade. Let's go to the 0.02 trade. Remember, we got out here. The 0.02 trade, it only just went against us by 10 pips, all right? So we're risking $2 times 10 pips. That is minus again what? Minus $20. And at this point in time, the 0.04 trade was plus or minus $0. Because remember, we got in here, and at this point in time, that is the same position where the market has closed. So the 0.04 trade was a break-even trade, all right? So this one, that's what I'm saying, this one is 0.01, 0.02, this one is a 0.08, 0.01, 0.02, and the 0.04. So now let's calculate to see. We have plus $80 minus $20 minus $20. At the end of the day, we have plus $40. Can you see this? At the end of the day, so despite the fact that we have losers, despite the fact that we were compounding and the market keep going against us, at the end of the day, we still came up with what? We still came out with plus $40. That is the Martingale system. That is how it works. The same thing will work for if the market is in a downtrend. If maybe you bought somewhere here, and instead of the market going in your favor, it started going against you. It started going down. And then as soon as it goes against you by plus 10 pips, if your risk is 10 pips, as soon as it goes against you by plus 10 pips, you do what? You open another trade. So you just put down, instead of putting down buy signals, buy stops instead of sell stops. At this level, we were putting sell stops, because we were presuming that if the market doesn't go on our favor and it keeps going against us, then we want to be selling. So we're telling the market that, okay, as soon as you keep going against me, I'm not going to give up until you give me one take profit. And that one take profit is going to bulldoze all the small losers. So that is the Martingale system, and that is how it works. It sounds so amazing. It sounds so appealing, so juicy and very tempting. But I'll show you guys where the trap or where the temptation in this strategy is. All right, let's go to the other slide. Now let's talk about why Martingale system is very deadly. All right, why the Martingale system is very deadly. Remember at the beginning of the video, I spoke about the trap, right? I spoke about the trap, and we're still going to be able to talk about the trap. Let's talk about how this system, why this system is so deadly. Now, you will never come out of this system alive. I know why I'm saying this out of experience. I'm a living testimony for this. I blew more than 3 accounts because I watched one YouTube video that was in binary options. Remember, I started Forex. I was trading binary options, thinking I was trading Forex trading. And I watched one YouTube video that was in 2015. I watched one YouTube video, and the person was talking about the Martingale system will never fail you. Just double this, blah blah blah. I tried that on up, and I blew up. In short, all my life savings trying to follow that system. That is why I'm saying you will never come out alive. You do the first few compoundings or the first few trade or the first few days of trading. It will look very, very exciting. But this second point, you need an infinity. Remember, the infinity sign is like this, right? You need an infinity account balance to be able to succeed in this system. Does it make sense? You need an infinity account balance to be able to succeed in this particular system. Because if you just have maybe your $20 account, or maybe your $100 account, or even your $1,000 account, or your $2,000 account, it is small. Because let's just assume you sell and you hope the market is going to sell and it starts going against you. You don't know at what point the market is going to hit one of your take profit. The market there can be a spike in the market and the market just shoots straight for 300 pips. The market shoots straight for 400 pips. Let's just say at that point in time, maybe your risk factor is just 10 pips and the market shoot up for maybe 400 pips. At that point in time, that means that is a risk factor of maybe about 40, you must have opened about 40 levels. So can your account balance handle 40 factors? I call it 40, the multiplier. Can your account balance at that level handle 40 multipliers, like maybe 0.01, 0.02, 0.04, 0.08, 0.16, 0.28, 0.5? Can you see how you start going? Very soon you start hearing of a standard lot, 2 standard lot, 10 standard lot, 20 standard lot. There is no, that is why I say, for you to succeed in this system, you need an infinity amount of an account. All right, your account balance should be infinity. That means you need to be in the millions to be able to succeed in such a way that whether the market goes against you for 10 multipliers, your margin, you still have enough margin to be able to handle those trades. You still have enough margin for the next trade to be open. Because let's just assume you started in a system and maybe you saw somewhere here and you thought maybe the market was going to go down and the market started going against you. The market started going against you and going up. And at this particular level, your account margin got finished here. Your account margin. So maybe the next trade now you were supposed to put 0.1 and you're having maybe something like a $200 account and you press that, you know that MT5 sound that shows you that there's no enough money, right? So you press and you hear that sound and you say, oh my God, I'm gone. And at that level, at that point in time, the market goes against you and at this level it pulls back and come here. Meaning if you were having enough capital and the market had enough margin to get somewhere here, this would have been the trade to take. This would have been the trade to recover all your losses. But since you didn't have enough capital, the market got somewhere here, you couldn't, this trade, there was no way this trade was open, and at the end of the day, your account was blown out. Why? Because you didn't have enough capital. Even if you have a $10,000 account, I'm still telling you, this is even still small. Even a $100,000 account, this is even still small for this kind of strategy. You don't know what time there's going to be a spike in the market. Nobody knows. You don't know what time there's going to be that recovery in the market. That's what I'm saying. In this kind of strategy, this is very, very deadly. So that is that about the Martingale system of trading. Even when it comes to betting, even if you are a casino player, this system is also very, very suicidal. This was the best term I was supposed to be using right from the beginning of this video, because this system is suicidal. This is a suicidal system when it comes to Forex trading. So even if you've heard of the Martingale system somewhere, or you've seen your friend using it, some people even develop tools. Some people even develop tools that they sell, and the main strategy or the main algorithm behind that particular tool is the Martingale algorithm. All right, people develop tools like this, and I've seen it. I've seen people advertising tools that have the Martingale system on the back end, and they are selling those tools. Guys, this is so inhumane. This is so suicidal. Because trust me, just tell me one person who has ever succeeded with the Martingale system, and I'll be able to take down this video and take out and take away all my everything and take away everything I've said about this particular system. I have tried and I've blown account. So guys, that is that about the Martingale system. And you know, in this channel we always bring out everything that keeps you informed, because if you are not informed, you'll be totally deformed. Thank you guys so much for watching. If you want more videos like this from me, make sure you smash the like button on the video, and if you haven't subscribed to my channel, smash the subscribe button below to subscribe to the channel. Check out my free Discord community if you want to hear from me one-on-one. If you want to be able to also enroll on my course or in my university, check out Godlove University link below, where you'll be able to get access to me one-on-one, talk to me one-on-one, attend my live session. Also check me out on Instagram, stay profitable, and also follow the next videos that are going to be coming at the end of the screen, because they are all related to the same topic. Thank you guys so much for watching, and I'll see you guys on the next video. Peace.